Hello, everyone, and welcome back to another episode of the Market Outlook series with me, Kavita Agrawal. As we do every week, it's Friday, and we are here to discuss what's gone on in the market and what is expected to go on in the next week. For this, we will look at a objective uh, analysis. We look at the objective analysis of Nifty, Bank Nifty, and the other sectoral indices, and assess where we stand. So, without any delay, let's get started with today's session. All right, now this is the chart of Nifty, and you can see the indicators that I have applied, very basic indicators here on the right hand side of the screen. Those who are joining us on Instagram will not be able to see that because that's been excluded. But those who are joining us on YouTube and LinkedIn will be able to see the list of indicators here. So as we always do, we will start off with the largest time frame, which is our weekly time frame. And here on the weekly time frame, let's start with drawing our trend lines. So you must have noticed every few weeks, I like to do this, delete all the drawings that were made initially and then make fresh analysis on the charts during these sessions. This basically gives us, an opportunity to kind of correct whatever mistakes we might have made in the previous analysis, right? So joining the basic peaks and the bottoms, we can see that over here there is a trend line which is yet to be corrected. And right now, even in case of right now, I would say the previous bottom over here is a potential support zone for the index right here. So let's mark this level on the charts. This is around the level of 21,900. Let's copy and paste and paste. There we go. Okay, what about the next level? So this is where we are at. Based on the weekly time frame, naturally the all-time high is going to act as a potential resistance. So that's another key level. That's around the level of 26,225. Okay. And what about next? So for this weekly time frame, this is the levels that are jumping out at us most obviously. So we'll stick with them. Let's now take a look at the RSI and see what momentum is telling us. So since this point, November 20, I would say the trend in Nifty has been really bullish, right? It took a major correction starting August 21, came down to June 22, and then started to rally again. One common theme that jumps out is the role of the 250 EMA. The 250 EMA acted as support, and once the index was able to sustain it, a rally started. So we can clearly see the ABC formation right here on the charts. What's happening right now? Again, the 250 EMA has indeed acted as the support, but there is a good probability that if the correction unfolds again, we might see another retest of the 250 EMA. That makes this level also an important support. So I'm trying to place the line at a point where multiple weeks lows or close points give interaction. So this would be around the level of 23,350. So this is another important support for the index should it start falling. Looking at the current activity on the weekly time frame, it is pretty evident that the weekly time frame is still very bullish because this last peak that was forged was against very bullish activity on the RSI. The RSI was well above the level of 70, indicating that the underlying trend is still bullish. So what's happening now? We've seen a major correction from September 2024 onwards, and this correction lasted about 16% all the way to 21,900. But corresponding to that, over here, if you see the RSI did not break below the level of 40 and has bounced back since. So this was the wave A. This appears to be the wave B. it would appear that a wave C might still be pending. Now, whether the wave C is going to come to 23,350 or all the way to 21,900, that is something time will tell for us. Here, what we had seen previously when the ABC formation unfolded, the wave C was truncated. Wave C being truncated means that it was shorter than wave A, or it did not breach below the low of wave A. So here we would expect the same thing, because if you look at the overall trend, it appears like a fresh new bull trend. It started out of this spot here. So this was wave 1, this was wave 2. This was wave 3. Now, because wave 3 cannot be the shortest wave, and right now it is already shorter than wave 1, the next wave that we witness on the chart will have to be shorter than the wave 3. So if the rally starts off from here, I would say it would end somewhere around the level of 29,000. So for now, 29,000 becomes my main target for Nifty. There we go. All right, now let's remove the brush marks to clean up the charts a little bit. Fantastic. Let's go to the daily time frame now. All right. So on the daily time frame, this definitely jumps out at me, this point. Why? Because this is where the breakaway gap took place. So when the index starts to rally, this point is going to act as a resistance again. So this is around the level of 25,575. Right? And what about immediate support? It looks like the level of right here. This is an important support. So let's mark this around 23,800. 23,800. It's more like a range, 23,800 to 23,900, but we'll stick with 23,800 for now. And right now also we are close to a resistance zone that we are struggling to overcome with respect to Nifty. That is the level of around 24,800. So Nifty has been trying to overcome this resistance level, but has not been very successful in the recent times. So if it closes and sustains this level, then we can expect next leg of rally up to the level of 25,575. But if it doesn't, then the next support is at the level of 23,800. Right now, if this is indeed the wave B that we've just assessed on the weekly time frame, then we can expect a deeper correction to unfold here. But here, if you look at the daily time frame, there was a positive divergence which indicated the beginning of this very rally. And since this rally has started, even though the RSI has managed to sustain the level of 60, like not exactly resisted, it has breached time and again. It hasn't really rallied here. So while the price continues to create higher highs, the RSI is kind of not creating higher. I wouldn't call it a divergence at this point, but this doesn't look very promising to me. It does indicate a small correction might happen or a revisit to the support. Like for instance, if you look at this section in history, right? What do we see here? Here also, once the Nifty started resisting the level of 60, right? It wasn't exactly resisting, but sustaining the level of 60 without really going up, the price kept coming down to retest the support level until it broke above, the level of 60 on the RSI and then broke into a rally. So we do expect a retest of the potential support of 23,800 going by these analysis. Let's take a quick look at the 75-minute time frame as well. All right, so on the 75-minute time frame, it basically reiterates what we've observed on the daily time frame. There is a negative divergence building up. Now, with every new peak that Nifty is making, the right-hand side of the RSI on 75-minute time frame is heading lower and lower below the level of 70, right? So let's play this alert again. So if the level of 60 gets resisted, then we'd expect the RSI to revisit the level of 30, something that we already do expect. Why? Because in the previous dips, we can see the 75-minute time frames RSI has broken below the level of 30, which in itself indicates to us that more weakness is expected in the market. So that's about Nifty. Now let's go back to our indices watch list. Now, we did the analysis on May 16 and we identified bullish versus bearish sectors. So let's update the date to May 23 and redo the analysis. Now, do we still think the FMCG sector continues to look as bullish as it was looking previously? Let's hide this. Let's hide this. Okay. Now, on the daily time frame, well, the 100 and the 250 EMA are definitely still acting as support, but the RSI on the daily time frame has started to head a little bit lower, which takes away my conviction, I would say. But if you look at the 75-minute time frame, the level of 40 is acting as pretty good support. So it looks like that if the broad market were to go into correction, then the FMCG sector might give you some opportunities which the broad market might not be able to give. So that's one thing that we should pay attention to. So we'll continue to keep the FMCG sector in the bullish segment. What do we have next? Consumption sector. Okay, so on the consumption sector chart, there is a mild negative divergence unfolding, right? Mild negative divergence on the daily time frame as well. So between the FMCG and the consumption sector, I would say the FMCG is looking more promising, and because there's a negative divergence on the FMC the consumption, we will move it to the neutral sector, right? Let's change this to neutral. Okay. Next, the PSE sector. I know retail traders' favorite sector probably. All right. So what do we have here? So on the PSE sector, on the daily chart, the sector definitely appears to be struggling to break above the level of 60. Is this significant? Well, the price has been creating higher highs, but the RSI has not. So we would expect a small correction here, maybe 4 to 5%, and a 4 to 5% correction on the index of the PSE will culminate into a much bigger correction on the stocks. So if you have positions in the PSE, I would say make sure you have your stop losses set beforehand, right? It is clearly taking some resistance over here. It's showing some consolidation, and there's a good chance that it can come back down to retest the 250 EMA once again. So this is where I see a potential support for the index. On the weekly time frame, the overall index definitely looks very bullish, but again, like I said, the short-term view does not look that great. 75-minute time frame is showing a mild negative divergence. So a mild negative divergence like we'd seen last time, we ended up in a 5 to 6% correction. That is again what we are expecting this time also, which would take it to the support zone that we've identified. So I think I'm going to move PSE to neutral. What about oil and gas? So again, on the oil and gas, also a mild negative divergence is developing, which again indicates that we might expect, we might be better off to expect a correction over here. This was a key resistance which has been approached by the index. If it does start to take a correction, I would think support come in again at the 250 EMA. So that is what we should look out for. So the bullish activity has not materialized yet, and the overall broad market's stance seems to be turning negative on even on a sectoral level, right? So here, what about the energy sector? Same story as the oil and gas, mild negative divergence on 75, on daily resistance from the level of 60, all in all indicating a bearish. Let's just keep this potential, right? So we have the date at the topmost one. Now, what about the private bank? So the private bank index did have a flag formation here. It broke out of the flag formation, but since then it's been stuck in a consolidation. When this happens, a lot of times it is going to impact the overall target of the flag pattern, right? So this flag pattern, so we saw one flag pattern over here, right? And you will notice that the pattern first gave a breakout on the downside. Now, this is the, you can say, disadvantage of using commonly known patterns, that they will often create traps, right? So this one over here created a bear trap. How? Because it gave a bearish breakout, but then reversed and rallied, right? Here it has given a bullish breakout, but it doesn't seem to be sustaining. So unless it breaks and sustains above the level of 28,000, I think it's better to stay away from the private banking sector as well. We had concluded it to be bullish because of the breakout that we noticed out of the uh, upper resistance channel, but the rally never really came. If you look at the individual charts of private banking stocks, there also we see consolidation going on. All right. Oil and gas. So let's go back to the finance sector. Okay. So finance sector here on the weekly, okay, there is an upward trending channel and we can see the price has almost reached the resistance of the upward trending channel. So with respect to the upside, there is not much left. There might be one last rally that might be witnessed, but I don't think it's really worth taking the risk. So I'm going to move this to neutral. What about the PSU sector? So again, on the weekly time frame, the underlying trend is definitely pretty bullish for the PSU banking sector as well. There was a mild negative divergence, and we've seen pretty good correction there. Positive divergence had occurred on the daily time frame. We saw a rally, but then this rally, unfortunately, has been stopped at the level of 60 on the RSI, which is not a very good indicator, right? That in itself is indicating neutrality and lack of bullish underlying momentum. What about Bank Nifty? On Bank Nifty, this was the previous close, and the price is very close to it, but I wouldn't say the price has created a higher high since. So we cannot consider this as a negative divergence yet. There was a rally, and this because it has broken above the level of 60. I would say the Bank Nifty has turned bullish again. So here the support is at 53,700, and if that gets breached, then the next support would be 51,900. We might see some more upside here, 57,000, which is very typical when you talk about the broad sectors. So it looks like there might be a divergence building up between Bank Nifty and Nifty, two of the major indices of the Indian market. But let's not jump to conclusion. So I'm going to keep Bank Nifty in the bullish segment because I do see some upside here. It might even go all the way up to 59,500, basically this upper trend line. So there is a probability of that. So we'll continue to keep Bank Nifty in bullish. What about auto sector? So I think auto sector here started to show something interesting. It went overbought ever so slightly in the last few trading days. And here it might be ready to give a small dip back to the level of 40 or maybe 30. But I think the overall trend in the auto sector has definitely turned bullish. So we'll continue to maintain it in the bullish segment. The defense index is looking really bullish, obviously, because it's overbought on the daily time frame, it's overbought on the 75-minute time frame. So we will continue to maintain bullish on that. Infra, there is a pretty big negative divergence, not a strong negative divergence, a big broad negative divergence developing on the infra 75-minute time frame. The daily time frame is also doing exactly what we saw on Nifty. It is not resisting the level of 60, but it is also not able to sustain above it, indicating that even though we are seeing higher high on the price, it's not exactly a very strong rally. So there might be some decline in the infra sector, but infra sector is definitely a sector that I will continue to look out for opportunities in the next decline. So I'm going to continue to keep it in the bullish segment. Same thing goes for the realty sector. The fact that it has sustained above the 250 EMA is very promising. And even if there is a temporary correction here, I would expect the overall trend to continue to be positive in the realty sector. Next is the consumer durable sector. I don't really think this is looking quite bullish, so we'll move it to neutral. Let's look at healthcare. Healthcare on the weekly, okay, so there was a negative divergence here, which, well, I would say has been realized. But we don't see a lot of bullish activity building up just yet. So I would say this is where it kind of turned negative when it broke below the level of 40, right? And it is yet to establish a higher high. So it we will wait for a confirmation of the bullish trend uh, to get established in the healthcare sector before we start making positions there. Next is the CNX Pharma. So pharma and healthcare analysis typically goes hand in hand. So we will move this to neutral as well. So you can see this week the bullish segment has been cut short significantly. Last week there was good rally seen in a lot of sectors, in a lot of stocks, individual stocks especially, right? So now we will quickly open our indices layout and take a comparative look on the indices. So starting Monday, so this is a 75-minute time frame, and since the closing on Friday, what we can see is the realty sector has outperformed the market, whereas consumer durable has performed the worst. Okay, here I want to add the defense index. There we go. All right, so this is the defense index. So the realty sector has outperformed the defense index as well. Close behind was the PSU Bank, the metals, the Bank Nifty, CNX, finance, energy. So the sectors that we did identify as bullish last week have given relatively better rallies compared to the Nifty index, other than the FMCG sector. So I think FMCG and consumption might do better this week. With respect to IT, I think you should continue to maintain some caution because over there, there were early signals of reversal, bullish reversal, but that didn't really sustain. So that is something to be careful about. Um, so yeah, that is that. Now give me a second. All right. Now, since you've done me the, you know, you've obliged me and joined the live session, I would like to bring to you this flash discount code live 23 May 25 off. If you use this coupon code on any of my subscription services, you will be able to avail 25% discount flat. Just until midnight today. So the subscription services that you can enroll for are the short-term swing trading portfolio, the live training workshop where I teach you swing trading over 24 sessions. The next batch is going to start from September, right? And then if you want to trade as well as learn from me, there's something for that. And if you're only interested in long-term portfolio, you can also opt for that. So only until midnight today, you're going to be able to avail 23% discount, right? So make sure that you take a screenshot of this because this flash discount code is only displayed in the live sessions. It is not even shared on my Telegram channel. It is only for the people who are interested in learning and associating actively with me and my services, right? And for those who might be new here, just to remind you, I am a SEBI registered research analyst. So the stock recommendations that you get from me are provided to you after thorough research and lots of analysis, right? So that's that. Before we move to the comments, I also want to tell you about my Telegram channel. So if you want to know about my work when I'm gonna come live or my Nifty insights, which I regularly share on the channel, all you need to do is join my channel Trade with Kavita. So in order to make it easier for you to join the channel, what I will do is I will share the link in the comments for you to easily click on and join. Right now, let's look at some of the questions. If you have questions that you would like me to look at, feel free to share them in the comments. I'd be more than happy to answer your questions. Just make sure that they are not related to the stock market or stocks in the sense. Okay, so Arpan had asked about my opinion on the automobile sector. So I already answered that. I think it looks bullish. Um, there is something on. There is a person asking for help on algo. Unfortunately, not my forte. I'm a discretionary trader and I don't use algorithmic trading personally. All right. Let's see. I can see some stock names, so I will take a note of these uh, stocks names, and if I do see opportunity in them, I will include them as part of my 100-day stock analysis series. Right. So, which sectors are looking good for short-term swings? So that question has already been answered for you. Um, all right. We see question about JSW Energy. We'll look at that. All right, so there is a good question from June asking, can you tell which videos beginners can watch? Honestly, if you're a beginner in the stock market and you want to learn the basics, the best resource for you would be the Zerodha Varsity. I highly recommend that resource because it's free and it's very well structured. So that is something that you should definitely pay attention to. Give it 3 to 6 months depending on your speed or learning rate. And they have enough material to help you build a strong foundation. So when I started into my journey of stock market, back then Zerodha Varsity was not available. So luckily my college was offering a career-oriented program called the NSE Certified Capital Market Professional. So that that was an in-person certification program that I'd attended when I was still in first year of college, and that really helped me build a strong foundation of the market, right? So if you're new to the market, make sure that you first got a thorough foundation and then you decide what you want to do in the market. Don't just chase what you might see another person doing, because that may not work out for you. All right. Cool. So I can see stock names like Tata Chemicals, Geofinance, and Hindustan Copper pop up in the comments. So I will take a look at them offline. And if there is any opportunity, I will make them part of my 100 days stock analysis series. Until then, thank you so much for joining in today's session. I will see you again on Monday at around 4 p.m. So stay tuned. Make sure you join my Telegram channel to not miss the live session and the opportunity to associate with me again. Thank you so much for joining. Namaste.